Hey everybody, hope you're doing well. Quick update on the next CPI, Consumer Price Index report. It's actually going to be released. Remember, we're in the middle of a government shutdown, but the BLS, the Bureau of Labor Statistics, says it's going to release it on October 25th. This is a 10-day delay. It was supposed to be released on October 15th, but because of this government shutdown, it's being delayed. With that said, it's still good that it's being released because remember, the Federal Reserve meets on the 27th through the 28th of this month. So just a few days after that report is released. Not only that, but the COLA, the cost of living adjustment for Social Security, is also part of this report. So it's important for those adjustments to be able to be made. Now, let's break down the numbers just real quick. It's going to be a quick update. I just wanted to provide you guys with this information. So first and foremost, the COLA adjustment last year was 2.5%. This year, it's expected to be 2.7%, which would make it a $54 increase for the average person. So yours might be more, it might be less. The average Social Security recipient right now is receiving $2,008. This will bump it up to $2,062. So a $54 increase if this ends up being the case. Now, when it comes to inflation, that's a big one. What is likely going to be shown in this report? Well, remember, we got some data from ADP in regard to the jobs market. So the jobs market is not doing well. We all know that. When it comes to inflation, remember the Federal Reserve, on the other hand, predicts inflation to be at 3% by the end of this year. Now we're in October. This is going to be September's report, so we're just a few months away from the end of this year. So inflation is likely to remain stable or slightly accelerate on this report. We'll have to see. In my opinion, if I had to just guess, it's going to be little to no change, maybe a slight acceleration, not enough to sway the Federal Reserve's decision to continue cutting interest rates. So when they meet just a couple days after this report, they're going to cut interest rates. That's almost a guarantee. I would say it is a guarantee. Barring a black swan event, this is a guarantee. Now, the one thing that I want to touch on here, and I never do this because this is a finance economics channel. When it comes to investing, you need to make your own decisions because everybody's financial situation is different. With that said, we have data. We have data that shows almost every single time that the Federal Reserve begins to cut interest rates, okay? Almost every single time, a year later, the stock market, this means the broad S&P 500, your broad-based ETFs are higher, okay? Now, you're going to hear a lot of people talking about this, and there are going to be a lot of people recommending that you invest in the market. If you ask me, I do have a degree in finance. I've been investing and trading my own money for over a decade, okay? If you ask me, yes, it is a good time to invest in the S&P 500 because of the data. Now, this is the one thing that a lot of people are not talking about, and this is the one thing that they're missing. And I'm going to make a standalone video on this by itself. But you have to remember that all this data is when the Federal Reserve starts cutting interest rates, right? A year later, you have higher stock prices. The Federal Reserve technically began cutting their FFR last year. Remember, they started to cut interest rates last year, okay? And then now they're continuing their cut for the first time last month. But if you look at it from that perspective, yes, the stock market is already higher since they began their FFR cuts. But people are saying like a year from now it's going to be higher. Do I think that's the case? Yes. But this situation is a little bit different because there's been such a large gap between them beginning their FFR cuts and now continuing their FFR cuts. Now, when you look at data, when it comes to FFR cuts, those pauses have happened. But this is a long time between those. So when people say, oh, a year, it's almost guaranteed, 100% chance that a year from now, over the last 20 FFR cuts, stocks are going to be higher. Yes, that is true. That's what the data says, and it's likely to continue. But remember, they technically began their cuts a year ago. So stock market's already higher from that. Just keep that into perspective, or put that into perspective. Again, I don't want to drag this video out too long. I'm going to make a standalone video on that because I think that is important to talk about. With that said, don't want to drag this video out too much. If you like personal finance, world economics, and investing, you're in the right place. Please consider subscribing if you haven't already. Every subscription means the world to me. It's difficult to grow here on YouTube. So every subscription absolutely means the world to me. If you like this stuff, I do weekly videos here, sometimes a lot of times more often. So I hope to see you in the next video. With that said, I hope you have a fantastic rest of your day. I'll see you in the next one. Take care.